morning. Thank you, Owen. That's great. Thank you for letting me know you can hear me okay. If everyone else could just let me know that I'm coming through loud and clear. Yeah, okay. Thank you, Matthew. Armand, that's great. Yeah, okay. I'm nearly set up my end, just making sure I've got everything correctly organized. There we go. Yeah, that's super. Great. Well, very good afternoon, and looking forward to this session. We are in a very interesting point now in the market. If we just recap where we are, we need to just take a little bit of perspective on current moves. We have seen some strong upside since the start of June, and we've seen some strong upside in equity markets since the start of the week. And particularly yesterday, we got a very strong risk-on rally, which was quite surprising. Now, what caused that risk-on rally was the general sentiment that just sort of built up yesterday. We had the Chinese private PMI data and the official PMI data, which between the two of them showed the biggest expansion in 10 years. We then also had the excellent ADP jobs data, which showed nearly, it's hard to say, but nearly 2.7 million jobs lost, which is a huge amount of jobs. But crucially, for the market's perspective, not as bad as the 9 million jobs expected. That, alongside some ISM non-manufacturing PMI data, which was marginally better than expected, it just all boosted that risk-on sentiment that we saw throughout the session. And today is a little bit like the morning after the night before. Just taking a look at bond yields, we saw bond yields breaking out at some key levels and really pushing higher on through yesterday's session, and that's got a number of analysts' attention. And if you look at the the S&P 500, and you can see that actually we had this strange dichotomy with equities moving higher and bond yields moving sort of lower and holding their lows. But now we can see the 10-year US bonds just pulling out over these recent resistance levels. And if we get put an ascending trend line on there and we get a further breakout, that will be even more significant. So you can see bond yields, this is 10-year US bonds, moving up in line with commodities and US stocks. That's the S&P 500. So we can see that this is starting to get people's attention, and the market is pricing in that the worst is behind us. If you just notice the feed this morning, there's about 5 or 6 different companies which the US administration is giving the go-ahead for vaccine trials. So this kind of positive sentiment that the worst of COVID-19 is behind us, job losses weren't as bad as expected, pointing to a very positive non-farm payroll, led to these strong moves higher in, strong move higher, lower in the dollar, and that pushed the New Zealand pound, US dollar, euro, US dollar, Aussie, US dollar higher, US dollar, Canadian dollar lower. Now, where are we today? Well, where we are today is in a kind of morning after the night before. This is the markets waiting for a key event, which is the ECB rate decision, which is due in just over 1 hour. We will finish in good time, so we have opportunities to get ready and prepare for that rate decision, as it could be significant for the euro and risk generally. But the market's sort of waiting, just digesting that positive risk on. Is that something that's going to go with any further? How is the ECB rate decision going to impact that risk on sentiment? And there's some profit taking going on. Just taking a look at some of the pairs, just looking here at Aussie US dollar, you can see that the Aussie US dollar moving into this key overhead resistance level, and that big round number at 0.700. So you can see that price just pulled away from the big 0.700 level, and there was some clear profit taking place into this overhead resistance level. So there's just a pausing going on as the market is digesting the latest moves. Taking a look here at the euro US dollar, see similar kind of phenomena going on. We have the overhead resistance level here, here, here. You can see the market's just pulling into that 1.12550. Some profit taking going on after a very strong run to the upside. You can see here with 1, 2, 3, 4, 5, 6, 7 days of gains. So that's been really mirroring the dollar index's losses. You can see the dollar has been acting as that safe haven currency over the last few weeks, and that's just carried on. You see these losses in the dollar index as the market begins to feel more relieved on and waiting now for any further catalyst to confirm that the worst has passed or contradict that narrative. But that's the main sort of narratives that's going on. We also have the Antipodeans, Australian dollar, New Zealand dollar, strengthened not only because of their high beta status, but also because these two countries were two of the first countries to shake out of lockdowns and get their economies going. So where we are now intraday, we're neutral on an intraday basis. There's too much uncertainty and hovering in anticipation of the ECB rate meeting to initiate a trade at the moment. So we do maintain a neutral bias. And you can see here, the dollar index is just pulling back. There's no specific reason for this dollar strength. It's probably just profit taking and just some kind of retracement that you get after some long market moves. So there's nothing really driving sentiment in a very clear way on an intraday basis. So that's why we haven't got a best pair to trade at the moment. However, the opportunity that we've got coming up, which is worth us looking at, is the ECB interest rate decision that is due to be coming out shortly at 12:45 UK time. So that's just over 1 hour from now. It's sort of 1 hour and 7 minutes time. We have the refinancing rate and the deposit rate coming up. So it's worth us just taking a moment now to get ready for that event. And the first thing that I would say is we have put up a video especially for this event in the feed. We've got a video there, how to trade the ECB policy meeting. So have a quick look at that just before, at the end of the webinar, and that will help you just really get ready and prepared for the meeting, because this is potential for some large moves out of this meeting, depending on what happens. Now, first thing to say is the refinancing rate is expected to remain the same, 0.00%. Don't forget, in the terminal, we have this resource here, the currency research. You can go down to see the interest rate probability tracker. So here you can focus on the ECB, and you can see what the probability of no change is. And the probability of no change is 61%. And the expectations are that the ECB deposit rate is basically going to remain unchanged for the foreseeable future. A number of central banks are really opposed to negative interest rates. They haven't worked very well for the Bank of Japan. They haven't worked very well for the ECB. So the appetite for further negative interest rates is really quite low. So the interest rates are expected to remain the same. Okay, so no deviation really expected there. So obviously, if there was a deviation, if there was a further interest rate cut, that would be very negative for the euro, and it would be an instant euro-US dollar sell. So that's just something to be aware of. But as it is, no expectations for that. However, what's going to be in spotlight today is really the PEP payments. So the PEP is the Pandemic Emergency Purchase Program, and the markets are expecting an increase of that purchase program. And the purchase program is currently at 750 billion euros, and the expectations are for 500 billion euro increase. So you can see here that 500 billion euro increase is the large expectations that we have for that meeting coming up. So if we get a disappointment, so say only 250 billion increase, that would be euro negative. So just to keep in mind, 500 billion is what's expected, because at the moment the ECB is expected to spend that 750 billion euros by October or September time. So that's why the markets are expecting them to increase the program, and they're expecting them to do it at this meeting. So that will be a key point to look at. The second point to look at is the economic projections. Now, the economic projections, you can get a full rundown of this on the video that we've prepared, but essentially the ECB are projecting inflation to be at 1.1% for March 2020, 1.4% for 2021, and 1.6% for 2022. So they're projecting inflation higher. Now, look at those projections. If those projections move lower, that will be negative for the euro. Similarly, on growth, growth is expected to be minus 0.8% GDP. Not GDP, sorry. Growth is meant to be shrinking by minus 0.8% for 2020, 2021 plus 1.3, and 2022 plus 1.4%. So look at the inflation and the growth forecasts. There's a number of different growth scenarios. The worst case scenario is a 5% GDP contraction. That's the best case scenario, 5% GDP contraction, and the worst case scenario is 12%. So looking for any projections that's worse, and the recent data is pushing the ECB towards the worst case projection. It's closer to a 12% GDP contraction than a 5%. So that's a key thing to be looked at. The other thing to be aware of is just taking a look at the euro. There is a potential for a buy the rumor, sell the fact response. You can see here that the euro has been rallying quite hard, breaking through these key trend lines to the upside, breaking through resistance at the 1.1150 level, and moving into this overhead resistance level 1.1250, and it's been sort of a solid move up. Now that's been on anticipation of the PEP purchases being increased, and also on anticipation of the Euro Relief Fund being, that it's going to just about get through despite the Frugal Four's objections. Now that may not be the case. So it's worth noticing that a lot of positives have been priced in. So it would really need something more positive than has been previously expected in order to, boost the euro even higher. So, there is a strong possibility of a buy the rumor, sell the fact response. So be aware of that. So if the bank fails to give the markets what they've wanted, the expectations of the 500 billion euro PEP increase, if they don't do that, then that would be an opportunity to sell the euro, especially after this run higher. So just reminding ourselves, 500 billion boost expected. Anything less than 500 billion, say it's a 250 billion boost, then that would be negative for the euro. And if there was no boost to the purchase plan, then that would be even further negative. So the pairs to be looking at trading, I think there's two pairs to be looking at in trading this. Say we get like a positive shift. So say the ECB are more optimistic, they boost the purchase program by more than 500 billion, say they have another 750 billion, then that will be positive for the euro. And we could look to pair the euro with the US dollar. That's because if the PEP program is better than expected, that will be a positive move for risk generally. So you could pair the euro up with the US dollar long, euro Japanese yen, and or even euro Swiss franc. So they will be the upside pairs. For an upside surprise from the ECB, euro US dollar, euro Japanese yen, or euro Swiss franc. Now, if there's a negative shift, and say, for instance, the ECB doesn't increase the PEP purchase program, then what we do then is we look at euro downside, and we pair it against the US dollar and possibly pair it against the euro Japanese yen. This is because we'd see risk off tones coming into the market. The ECB meeting has the potential to switch the risk tone today. So you'd expect to see dollar strength, Japanese yen strength, so euro US dollar, euro Japanese yen, or euro Swiss franc downside if there's a dovish shift by the ECB. So to keep it simple, you might just want to trade the euro US dollar. It's a good pair for trading large moves because of its liquidity, and it's easier to get fills on the pair, and often the spread is quite reasonable. So the favored pair for both bullish and dovish expectations is the euro US dollar. So that's something to be aware of, and that's the currency pairs to be looking at. As I said, don't forget, do have a quick look through the video preparing you for the ECB policy meeting that we have today. That would be very, very helpful. Have a look at that, and you can see everything that you need to get completely ready for the event. So aside from that, the market's just in a kind of wait and see mode. It's also worth just looking at gold. We see gold falling down on the rising bond yields, as well as on the risk on tones. That just sort of moved gold downwards with the bond yields moving higher. So that was a significant move yesterday. It sort of just toyed with that $1,700 level and has since taken that level. We've got consolidation going on in WTI and Brent crude. Little triangle forming here on WTI. You can do a little triangle there with the trend lines. So expecting that level to break out one way or the other. And that's obviously on the OPEC discussions that there've been. That originally, there was expectations for OPEC to be meeting earlier to extend production cuts, but haggling over oil quotas has led to a pause in communication and a pause in an agreement to meet in order to agree those production cuts. That's why we're seeing sort of consolidation in oil. The oil market's just waiting for some further news. Will OPEC meet or will they not? Will the other OPEC plus countries that have not been keeping their oil quotas, will they agree to keep their oil quotas? Of course, historically, the oil quotas are very rarely adhered to. So this is just a question of history repeating itself. So we'll have to see what happens there in the oil markets. But that was another significant story to be looking at. And obviously that's relevant for any US dollar CAD traders. So at the moment, we've got reasons for dollar weakness and CAD weakness. So we have that neutral bias on the US dollar, Canadian dollar pair. As we did yesterday, we still maintain that bias today. And you can see we've just been seeing this flat range bound movement, which is kind of what we would have expected. Okay, that's gone through some of the most relevant events that we have coming up. Don't forget, now is a time if you would just like to ask your questions, any currency pairs you're looking at. You know, if there's anything even you're looking at from a medium term, conscious that on the intraday basis, things are quite quiet today as we're just sort of pausing and waiting ahead of the ECB meeting. So that's to be expected, really. So if there's anything you're particularly looking at, please do put it in the question and answer panel or in the chat box. I'll get back to that. So I'm going to start working through folks' questions now. So if you've got a question, do just type it in and I will get through to it. Let's see. Yeah, okay. Hi, guys. Right, okay. Ravinda, great. Why did the ECB not plan the additional 500 billion that the market expects, as the 750 billion will get consumed by September, October? What will cause them to stay short? Yeah, Ravinda, it's a good question. You know, why did they? I guess the reasons are that these are unprecedented times and these are huge sums of money. So I guess it's always nice to have something in the tank. So maybe whenever they're deciding what they're going to do, they've got to have in the back of their mind, you know, where does this end? So I could imagine them when they planned the original 750 billion, that they thought to themselves, well, you know, and we can add extra in during you know, in the future. So obviously they're going to be thinking a little bit ahead because they've got to, especially dealing with huge sums of money. But I think the reason why they didn't say it from the outset will be simply a wait and see. It's easy to run a lot of things with hindsight. And I guess running a government or a central bank is no different. So if they knew exactly what was going to happen and when it was going to happen, I guess they would have made different plans. But remember, going back to February or March, I remember around February, Ravinda, many people were talking about coronavirus like, you know, it's just the flu. What's all the big fuss? Why are people getting worried about it? Even here in the UK, even in March, you know, our local church was looking at a meeting together, and no one was really thinking that coronavirus would be a problem. It was a bit like, oh, this is a big fuss. So I guess, Ravinda, what's happened is that the ECB have wanted to see what happens. So I guess the risk, what will cause them to stay short? I guess the risk, Ravinda, is that the risk on tones give the ECB confidence, and that they say, well, you know, we've got confidence that that the economy is going to recover. I think I can't see them necessarily staying short because markets are still very, very markets are still very, very nervous about how quickly people are going to recover from coronavirus, how quickly businesses are going to get up and running. Like even here in the UK, lockdowns have been lifted, but you know, work and business is still not back to normal by any means. So I think what would cause them to stay short would be, you know, some expectation that things aren't as bad as they are. But until we get news of like a definite vaccine, or we definitely start seeing people getting back to work and coronavirus not ripping through a population, but they're the kind of things I think, Ravinda, they'd need to see. Yeah. Anthony, hi. Yeah, would you trade into the ECB or wait until after the announcement? I'm thinking no change on ECB, so negative for euro. Thanks. Yeah, hi Tony. I think the trade into this was the long on expectations of the ECB moving with the relief fund and the rate decision. But practically, that was a very difficult trade to trade, Anthony, because it was all tied up with the US dollar. And the US dollar is moving on the risk associated with COVID-19. So I think for a number of good couple of weeks now, the market's been more optimistic than many people have been expecting. And the market has got this habit of discounting negative news and just focusing on the positive. I would definitely wait until after the announcement. I don't see an easy trade into this. I mean, if you wanted to take a risk that, you know, the ECB is not going to change, say they do what's expected, you know, the 500 billion euros, they keep projections roughly the same, interest rate stays the same, you might see a spike higher, so and then a sharp move lower. So if there's no change and there's a spike higher, then that might be an opportunity to sell the rally. So you can take a chance, but it is a chance, Anthony, that that there's a surprise, something unexpected happens, or the market even reacts differently to no change. So just to be aware of that. Personally, I'm not trading into this, but I might consider trading out of it. So I want to see what happens with the ECB rate decision. That's my take. And for me, the key things is if we didn't get any extra expansion of the PEP program, say there's no expansion at all, that would be a clear US dollar sell for me, because I think you're also going to see some dollar strength on the risk tones. So that would be for me, and then just checking the markets reacting as you expect it to. Yeah. Hi, Rolando. Hi, Giles. How can I approach more to swing trading, taking into account that sentiment shifts may occur at any time? Is there any basics for swing trading? I feel that I grasp day trading, but it seems to me that even if I take now a swing trade based on the information, it will be difficult for me to remain firm on the original idea during the days or weeks that a swing trade can long. Thank you for your advice. Yeah, Rolando, I see that conundrum. It's once you start getting the feel for intraday trading, you see how the market reacts and swings to these mood shifts, and it doesn't take too long before you get a handle on that, Rolando. I can see, you've got that handle. You can see why the market's moving. Now the difficulty is how do you apply that on a swing trading basis? I think the mistake that some people probably make, Rolando, is they try to trade a swing trade like it's an intraday trade. So on an intraday trade, you're using tight stops, comparatively speaking, and you're taking small profit targets, comparatively speaking. Now, when you're swing trading, maybe you need to just zoom out on your chart and to be looking at charts from a daily and a weekly perspective. And then you're taking sort of more big picture moves, aren't you? When you're trading on a daily perspective and you're putting your stops above recent swing points, you'll be using larger stops because you have to, so smaller position sizes, and then you're less focused on the 20, 30 point shifts when, when it's the sort of thing, Austria say, we don't like, it was a headline that came out and said, Austria have said, we don't like the idea of the Euro Relief Fund giving grants. We would much rather see loans. And then, you might see the euro sell off 20, 30 points. Now, if you were intraday trading, you might say, oh, okay, I'm going to close my position because that's put some negative sentiment into the euro. But if you were, swing trading, you have to view the news in a slightly different way. So, okay, yes, Austria have said that. Yes, that's a negative, but A, it's not unknown. B, what about the other countries? Is that enough to close my trade now? So I guess the typical thing is it's a lot easier, Rolando, to know when to close your trade on an intraday basis, because as soon as you get some sentiment which is against your trade bias, it's obvious to close. But when you're swing trading, you've obviously got a lot more information, so you're having to balance that. So I think you just need to take a bit of a wider perspective. And you might want to say, on a swing trading basis, when the news comes out, you might want to give yourself a few hours to analyze it and say, okay, well, that's come out. Is that news a fundamental shift? And perhaps you'll wait till the end of the day. Maybe give yourself a little bit more time. I'm sorry if that isn't very helpful, Rolando, because I see the problem. And obviously myself, I'm focused on intraday trading. So I'm more in your boat. When I take swing trades that work, it's when they've got like a decent fundamental shift to them, when it's just kind of obvious that market's going one way. And you could say at the moment, Rolando, what's been tricky is all the major central banks have been doing the same thing. They've all been cutting interest rates. So it's not that good for FX at the moment with all the central banks doing the same thing. We need a divergence. So one area that helps me, Rolando, is focusing on central bank divergences. So let's take, let's just take the Aussie dollar as a hypothetical example. Now, this isn't the case, but just imagine that the RBA say we're going to be looking at cutting interest rates. Obviously, they're not. Okay, so you see weak Aussie dollar, and then you see the Fed say, well, we're looking at hiking interest rates. Then you've got a divergence between the two, and then you can start looking at where to enter from a swing trade perspective, where you can take a larger position, larger stop sizes. So I would say focus on central bank divergences once we start getting a bit of normality back together. And then secondly, use higher time frames. And thirdly, don't respond to every single thing in the feed. It's one of those things you probably want to take, not look at the screen so much, because if you're looking at all the information all day long, you're more likely to react, aren't you? So swing trading probably suits a more hands-off approach. I hope some of that helps, Rolando. It's a tricky issue that you say. Drew, yeah, hi from Canada. Hello there. Opinion on euro pound? Yeah, sure. Let's take a look at the euro pound pair. Okay, so at the moment we have been seeing general euro strength, and the general euro strength is been on the relief fund, the PEP program, and the general support that there is from the ECB towards the euro. So that's led to upside in the euro. Now, the pound in the wider term is still biased negatively because the UK has until the end of this month, end of June, to be able to agree an extension to EU-UK trade relations. Now, they haven't got a deal yet, and they need a deal in order to have a smooth transition. So the bias for the euro pound is still, broadly speaking, to the upside, on the basis that the UK is heading closer and closer towards a trade hard a Brexit exit. So that would result euro pound strength. So that's the medium term perspective, is upside for the euro pound. Now, from an intraday perspective, again, we'll be waiting on the PEP decision. Now, the pound is a little bit pressured at the moment. We can see a bit of euro pound strength coming in on negative comments that the UK is preparing for a hard deal Brexit. So that does support euro upside. So if there is anything very positive for the euro, so say, Chiraro, that we get some really good news from PEP, from the ECB regarding the PEP, that they boost it by more than 500 billion, they boost it, 750 billion, then we'd expect euro pound upside. And one way into that might be, a simple way into that trade would be something like a break of that ascending trend line. Okay, so that could be potentially a way in if you get a break of this trend line and moving to the upside. Okay, that would be a low cost entry. You could enter potentially at 0.6970 and just have a tight stop at 0.8962 and then try a couple of times. So if you're thinking, hang on, this should have upside, you could try entering at 0.6970, have a tight stop 6962. If you get stopped out again, put your entry back in same place, 0.69 70 odd, tight stop 0.69, maybe make it a bit wide, 0.9660, and then try it a third time. And that's a potentially cheap way of getting into a move when you're convinced that move's coming. So a bit like with oil. So say for any of you oil traders, and if you don't trade oil, it doesn't matter. It's the same principle. But say you've got like a bias for a currency pair. In this case, it's a commodity, but just don't worry about it being a commodity, because the principle is the same. Look, you can see, look, you've got this consolidation into this triangle. Now, you know that say there's some, positive news that comes out for OPEC, if obviously it was that positive, you could enter in at market. Or if you get some negative news, a break of this level here, you'd expect more downside. So you could have a tight entry, 31.97, and then a tight stop, 32.17. And you could try entering once. And if you get stopped out, try again, and then up to 3 times. And that's like a cheap way of getting in to a trade. But that really works well when you've got some, you've got some really technical consolidation like you have here in oil. So, just mark these on your chart, just mark that in, okay? Mark that triangle in, and watch how price reacts to that in relation to the news, okay? And you can use exactly the same principle on, exactly the same principle on currency pairs. Just the fact that it's on a commodity doesn't. Yeah. Okay. Great. Hope that helps, Jerome. Yeah, you're welcome, Ravinda. Yeah. Hi, Giles. How did you start your learning curve in Forex? What would be your advice for beginners to start with? Yeah. Well, I started in a very painful way, because the way I started my learning curve in Forex is I went to speak to a pensions advisor when I was a lot younger, and I asked him about, could I make my pension pot increase by changing the UK pounds into US dollars, and then changing US dollars back into UK pounds when the exchange rate was in my favor. And what he said to me was, he didn't say you could do it, he didn't say you can't do it, he says, well, then you'd be doing what I'd be doing. And so I started learning about the foreign exchange just over the internet. And it was a very, very painful learning curve that I took, and took me years before I got some really professional training. So the fact that you're here is really a great place to be, because you'll be understanding how and the reasons for currency and commodity markets. Now, my advice for beginners is very simple. The first bit of advice I give is this: don't move from the Forex Source terminal. Now, I'm not just saying that because I work with it, but I'm saying it because this is the information that professional traders use in order to trade. And once you have that strong fundamental understanding of the market, then that you're very well set. So first of all, don't move. Secondly, I'm aware that when you come to the feed, it can be overwhelming, just the amount of information. Now, a lot of this information you pick up as you go along, and a lot of the information you'll be continually learning throughout your trading career. So I'm still learning in my trading, and I don't know any traders that aren't still learning and developing. So first of all, if you don't know it all, don't worry about it. But the first thing to start with is practically just go to the must read section on the terminal. And when you go to the must read section, always read the opening news before your session. So if you're coming before to trade the US session, open the US session. If you're trading the European session, open the European session. So you just open it up, take a look at the key bullet points at the top, look under the FX title, look under commodities, because you'll know that oil impacts CAD, and you want to see copper prices because that impacts risk tone, and you want to see gold prices because that's a useful tool for risk at the moment, even if you don't trade those commodities. And you will have a look. You don't need to read everything here, but you might want to go into the detail, like with the UK. You might want to go and have a little look at the key Brexit news that's come out. And then when you've done that, take a look at the Forex source dominant currency sentiment. Here, what we do, Wojciech, is we try to filter down the important news and filter it down in order to give you some currency pairs to focus on. And then once we've done that, look at the first video of the day, and then in the feed, you'll notice that we go through different currency pairs. So you compare your analysis to our analysis on the different currency pairs. And what you can do is you can then know that we're going to update any significant move on a currency pair. So if a sentiment shifts or changes, we will update you and let you know. So it's like having someone always there to tell you anything significant. And, you know, as soon as we have something significant to say, and especially if there's something obvious, we will be right on it and explaining that to you. And here you see you've got your daily risk event outlook. Again, a must read because it tells you what's going on. Like today, we're focusing on the ECB rate decision. I've also got the initial jobless claims and the continued jobless claims, which actually is important. I did forget to mention earlier, so it's worth just covering now. But you can see, you know, do look at this. If the jobless claims keep going lower, that's potentially a positive for risk. But we want to see the continued jobless claims to keep moving lower because that's the initial claims. So obviously you expect initial claims to get lower, but this is the continued jobless claims. So if we see the continued jobless claims going lower, it means that less people have continued being jobless. In other words, more people are back in work. So a healthy dip today will be positive for risk tone, bearing in mind the positive ADP figures yesterday. So that's something to be looking at. So there you go. A case in point, have a look at the daily risk event outlook and you won't be missing anything significant that's coming up. I hope some of that helps, Wojciech. Alan, good morning. Can you please summarize what would make you short the euro or long on the ECB meeting? Thanks. Yeah, sure. So short the ECB would be like no PEP bonuses. So if there isn't a 500 billion euro boost to the PEP fund, I would short the euro. So anything about 250 and below, I'd short the euro. Or a change to the interest rate. So if interest rates were cut, I would short the euro. And I'll also consider, I would consider shorting the euro if there was no change, but that's a consider. And I hope that helps. Sharia, hi Giles, hope you're safe from work. Yeah, very good. We've been enjoying some lovely unseasonal weather in the UK. We've had 25 degrees plus for like the last 1 or 2 weeks. We just started to have a bit of rain, so it's all back to normal. A couple of days you sent a link here in the live chat here about FTSE 100 and sterling. Unfortunately, I missed the link. Could you please send it again? Yeah, let me just see if I've got, let me just drag that link out, just bear with me. Yes, here we go. Yeah, I've got it. Yeah. Okay, send the link now. Here we go, Sharia. Oh, Sharia, could you send me another message? Because when I've clicked to answer it, I can't type an answer. I'll send it to all panelists, but if you send me another message, then I can reply to you directly. Yeah, thank you. Right, I can type the answer now, Sharia. That's it. Yeah, that should be across now with you. Okay, any expectations on pounds? Bojo said to banks to prepare to walk without a deal, and the pound lagged yesterday. Yeah, it's the same old story at the moment, Matthew. You know, the pound keeps going to find sellers on the. I keep expecting to find sellers on the rallies because of expectations for a hard Brexit. That remains to be the same. So the difficulty at the moment is the pound is moving on the US dollar. So it was the US dollar weakness. Look, you see this US dollar weakness that pushed the euro higher, Aussie US dollar, New Zealand US dollar higher, and also pushed the pound higher. So there's reasons for dollar weakness and pound weakness. So I'm expecting a bit of range-based movement now, unless we see more risk-on tones and more dollar selling. But the expectations of the pound continue to be selling rallies medium term on expectations of a hard Brexit. We're going to keep getting negative for headlines. Obviously, Matthew, if there's something positive about the UK, say, Michel Barnier and Boris Johnson have a good meeting, or there's some positive rhetoric, the pound is a very obvious buy. So at the moment, expectations are for no deal, selling the pound medium-term rallies, and that remains to be the case. Oh, WasCheck, yeah, yes. Yeah, WasCheck, if it's any comfort for you, swing trading, for those traders who hold their positions for like 2, 3, 4, 5 days, it can end up being more profitable than intraday trading. So swing trading isn't a disadvantage necessarily. And the key thing with your accounts, you need to keep your accounts, and you don't want to blow up your accounts. So that's a habit you got to get out of. Pretty much every trader's been there, especially when you're first learning to trade. But one of the key things to do is trade without leverage. Because remember, if you can say, look, I can return double-digit accounts for a year, I can get 20, 30, 40% on my account in a safe, steady way, then what you can do is you can capitalize that. You can even go to friends or family and you can start trading larger sums. But if you blow up accounts, then you're never in a position where you can trade more significant sums. And it's the significant sums which make trading a career and make trading something you can live off. But in order to get there, you've got to be able to having a low drawdown, 4, 5% maximum drawdown, and then looking for double-digit returns. So the quickest way to do it, WasCheck, is trade without leverage. So if you're trading a £10,000 account, by trading without leverage, have a 0.10 trade size. If you're trading with a £1,000 account, trade with a 0.01 lot size. That's trading without leverage. And another little trick you can use is say to yourself this, say with your next account, say this is my account, I'm going to trade it without leverage, but crucially, if I lose 10% of my account, I'm going to stop trading for 2-3 months. And I'm going to, demo trading, I'm going to go back to learning and get my head around it. And eventually, WasCheck, you'll just, you'll lose less, and then you'll start to be break even, and then you'll start to make a little bit, and that's the way it goes. But you've got to, that's it. By not giving up, you will get there. Yeah, hi Richard. What would be a good monthly rate of return for an unleveraged account? I don't want to get into the habit of chasing targets as such, but it's hard to monitor performance unless you have a target. Would 2% be modest or an upper end, for example? Not that I want to work for firm, but what would you expect? Yeah, 2%. So 2% is good. So anything upwards of 20% in the year is very good. That's what you want to be looking at. Yeah, Shauna, I posted that link to the chat. I hope that I hope you found that okay. Yeah, Anthony, thank you. WasCheck, Anthony's got some words. He says that the key to Forex for him has been live analysis daily, the sentiment feed and squawk, 3, a complete understanding of risk on, risk off, 4, technical understanding, 5, the psychology of trading, 6, without you trainers and Jarrett and this live analysis, I would be lost. 3 years for me and I'm finally doing well in my trading. Thanks so much to everyone at Forex Source. I hope this helps everyone. Thank you, Anthony. That is very good to hear, and some really good bits of advice there. That one, live analysis daily, yeah, that's there's nothing like it really, just having that live analysis. And don't forget, I would say, don't forget, guys, I don't want to be much longer because we've got the ECB meeting coming up, but don't forget, at the bottom of these videos, there is some questions. So say, you know, you've got a, here, that was like, you can put a question in here, and that comes to the analysts at our end. So we see that. So say if you know, you type in like, you know, I don't understand why the pound is so strong today, or so the pound is so weak today. Whatever it is, if you put it in there, and then when we get the questions, we might be able to just type out, do a video as an answer, and the video will get sent to you personally. So obviously we can't answer every single question, but it is a good opportunity, and I look through them and I do answer questions, and I know Arno answers questions, and we do answer these questions. So if you've got one, just put them in there. Don't struggle. That's one of the things that, you know, I found so hard when I was learning to trade, is I didn't have anyone to talk to about how I was learning, and it was very, very difficult. Whereas I would have bitten someone's hand off to have a feature like Forex Source, and I'm saying, you know, take the most of it, like you guys do with the question answers. You use them a lot, and it's very good. And don't forget, even when we're not on the live webinars, you can still get some contact with us, and you know, we're really happy to post out an answer. Okay. Okay, I'm just going to go through some final questions now before we close off for the day. Okay, so Lucas has asked, would you wait with trade after press conference or just after data? Yeah, now there's two, that's a good point, Lucas. There's two opportunities really. Opportunity number one is to trade the announcement. So if it was the PEP package was not increased by 500 billion euros, say it was 250 billion euros or less, we'd expect the euro to sell off. Say everything is as is expected, then you would want to wait for the press conference, which comes a little bit later at 1:30. So don't forget, the press conference is just after the deposit rate. So that is, let's see if I've got that. Yeah. You've got the press conference at 1:30. So 45 minutes after the rate decision, you will have the press conference. So if there's no change, wait for the press conference. If there's a change on the decision, then you could enter straight away. If the PEP program is not boosted by 500 billion euros, that would be an instant sell. But be aware that things can change at the press conference. So you have to keep the two events as one in your mind, that they're both significant. And then after the press conference, or during the press conference, you can follow along with the headlines. And of course, any significant headlines will be used and sent across on the radio squawk. So that's there. Okay, guys. Yeah, was check. Yeah, based on hopes rather than analysis. What you'll find is when you get onto the analysis, it's much harder to lose more significant amounts of money, was check, because your analysis prevents that, and you're picking higher probability trades. So naturally, you just find if you are struggling to be successful, you'll find that you will lose a lot less, definitely, and then you'll get to break even, and then you start making money. Okay, guys, thank you very much. Been good to have you as always. I hope you give you enough time now to get all prepped and ready. Don't forget, do check out the ECB preview, how to trade the ECB policy meeting today. Do have a quick listen to that when you're off this webinar to get totally prepared for the event. Take care, everyone, and thank you very much for the session. Thank you. Bye.